Hello and welcome to another video here with The Common Investor. This is Nick, and today we're going to be giving you a full Facebook stock analysis, and by the end hopefully that will help you make a decision on whether or not you should buy Facebook for a stock in your portfolio. So if you look right here up front, we have the Thinkorswim from TD Ameritrade, and that's going to show us the graph of how Facebook's been doing over the past 3 years is what I have it set to now. So we have all the way starting at 2016 all the way up to current 2019, March 2019. So as we can see, Facebook has been trending up, and it was trending up until about mid last year, when they were kind of hit and a lot of people sold off Facebook due to the Cambridge Analytica scandal. A lot of people were concerned with the privacy settings regarding Facebook, and people didn't think that Facebook was taking priority in people's data. So you can see that it kind of started dipping down, and it was dipping down for pretty much the remainder of 2018. But right now, if we zoom into this region, it's really the beginning of 2019. We can see that it's been starting to trend up, and I'll just go back to the full year so we can see right here it's been starting to trend up. It's easier to see it from this time frame, but we can see that it reached a high of $218 per share last year, and it's starting to trend back up because I think more people are regaining faith in Facebook as they are, and they have vowed to take better measures towards their privacy. And I'll get into a couple more reasons why you might want to invest in Facebook. So if you look at just their basic data here on Yahoo Finance, we can see that their PE ratio is around 22.7, which is a fairly healthy, a very good PE ratio for something like Facebook. It's what you want to see, not too high. Also, it's not very low, so not very impressive, but it's a decent PE ratio, which is good. We see that their beta is 1.1, which is it's not very volatile. It's not too high in terms of volatility, which is good to see. So not a very volatile stock, and it's also has a fairly relatively good PE ratio, so that's good to see. But really what I want to get into, which I think is the biggest indication of the state that Facebook is in right now, is just their annual report and their annual income statement. And we can see over the past 4 years right here, starting from 2015 to 2018, the revenue has done nothing but just grow tremendously. So we can see that it was at 15. These numbers are in thousands, so it was at 15 billion in 2015, and it's been doing nothing but trending upwards. So it went from 15 to 23 to 35 to 46. So we have a very nice upward trend, and this can be directly attributed to just the immense amount of ad revenue that has been going into Facebook. A lot of advertisers are realizing that TV ads, radio ads, other ads that they normally felt more comfortable investing their money into isn't working as well as online ad revenue. So this is why they're pumping more money into things like Facebook, Google. But Facebook is the largest social network online, and they also own Instagram, so that they have a very large share of internet traffic. So that's why I think that investing in Facebook, you're going to see a lot of that ad revenue coming into Facebook, and we can see here from historical data that it's been nothing but trending upwards, which is good to see and a reason that I would want to buy it. Then if we move on to the balance sheet here, we can also see their assets, and we can compare that to their liabilities. So we can see just over the past 4 years, again here, it's been trending upwards. Obviously, their assets have been trending upwards as they've been just bringing in more income, more revenue over the past 4 or 5 years, and so that makes sense. And they haven't been spending it on too much, so that they've been spending it at less of a rate that they've been making it, which is obviously good to see. And then if we compare that to their liabilities, so if we look at their liabilities here, their accounts payable plus other current liabilities, and then we look at their total current liabilities, we can see that that's around 7 billion, which is much, much less than their current assets. So they're pretty much in no debt, which is also another good thing to see. So just kind of bringing everything together here, we can kind of see that from this is trending upwards, that a lot of people are starting to regain their faith in Facebook, and I definitely think that we're going to keep seeing that upward trend, and it will definitely bump back up to over $200 for sure. So I think Facebook's a nice safe investment, definitely a nice growth stock, nothing that's going to grow. Like I wouldn't expect Facebook to double in the short term. That'd be very hard to foresee, but I definitely think it's a safe stock to put your money in if you want to see a decent return on it. But let me know what you think in the comment section. Don't forget to like, comment, and subscribe. Um, and before, if you're thinking of buying Facebook, make sure to do your own research before you make that decision. But I'm gonna have to say that Facebook is looking pretty good right now, and I'll definitely be adding some of this to my portfolio. So thanks for watching. We'll see you in the next video.